Hi, this is Asia Tech Podcast. My name is Graham Brown, joined in the studio by Darvin Kurniawan. Welcome.
Hey, thank you for having me.
It's great to have you here. So before we talk about Reidao and your journey as an entrepreneur, we also want to know a little bit about your background. So you're from Jakarta, Indonesia originally.
Yes.
You came to Singapore a few years ago.
For university, a long time ago, actually.
Oh, for university. What did you study here?
Computer science.
Right.
I was trained as a technology person, programmer of sorts.
Yeah.
Yeah, before, of course, I moved on into this
Okay.
entrepreneurship.
Good. So do you consider yourself a technical guy?
Yeah.
All right. Because we're going to talk about blockchain. We're going to talk about DAO, with decentralized organizations, right? So,
of course.
Okay, so you can help us understand a little bit of that.
Right,
Okay,
sure.
I'm a technical guy, but when we come to blockchain, I'm sort of bridging worlds between blockchain and the outer world of normality. So you can help sort of unpack a little bit and translate that for us. Okay.
Definitely.
We're going to talk about real estate as well.
Sure.
Okay. Your background before you got into Reidao, were you an entrepreneur beforehand? Were you involved in real estate? Were you involved in blockchain? Tell us a little bit how you got into this, and then maybe we can talk about what it is that you do.
Right. So, of course, I was trained as a programmer, a technical person. So the first few jobs that I had was basically in that space. We developed software before, I moved on to try out different areas of the business. Actually, my last corporate job was with in a media company, and I was dealing their digital signage system. So it is related to technical aspect of the whole operations, but it is enroaching out to the marketing aspect to it. And this is where I realized that, hey, I'm probably suited more better in looking things in the big picture kind of way. And that's when I kind of started doing startups. So Reidao is not my first startups. I did a few startups before.
How many? What number is this?
Well, 3, I think.
So this is the third?
Yeah, but
Right.
not just in Singapore though, right? I also traveled back to Indonesia. So we started many kinds of startups, not just from the technological angle, but also from low tech even startup.
Tofu.
Yeah, exactly. That's one that.
So
I
tell us a
started
little bit about that, because I think it's really interesting, even though this is not about blockchain. I think when people want to understand more about the company and the person in particular, the fact that they've been involved in many different industries and they've been involved in like a food and beverage type industry as well, it gives them more of an understanding what kind of an entrepreneur they are. So tell us a little bit about your history with tofu.
Right. No, so because I've been staying in Singapore for 18 years now, right? So I kind of saw this rise of this particular dessert food, which is that soft tofu, and realized that, hey, we don't have this in Indonesia yet. And that's when we thought that, hey, let's just bring it over, try it out.
Yeah.
And it is basically a validation, right? We started small, one stall, and we saw this grows, and we expanded. So it's a clear cut, try out. If it doesn't work, then we scrap it. If it works, we do it.
Right. Were you importing the products, or were you making the product yourself?
Yeah, so we imported the raw material to Indonesia.
Okay.
And Indonesia, we have a facility to basically, cook the product and then package it, deliver.
So you were making it in Indonesia?
In Indonesia.
Then exporting it to?
No.
This was in Indonesia at the time?
This is an Indonesia setup.
Right.
So
And where were you importing the soybean from?
From Singapore.
Oh, so you're importing from Singapore?
Yeah.
So they make soybeans in Singapore? They farm them?
No,
they
so this is
them?
they also imported it.
Right.
But it's a semi-processed product.
Right.
Right. But it's not really the tofu that we see that I've been importing. So
right. So you imported that to Indonesia.
Correct.
And you set up a concession stall somewhere selling just this soybean dessert.
Yeah.
Okay. And how was that for you? What kind of an experience was it for you? Were you on the stall yourself?
Yeah, well, of course, for the first 1 or 2 stalls, we have to do it. And I guess this is when I was exposed to the challenges of actually running these kind of stalls in Indonesia. For example, one of the biggest challenges that we had was manpower. Right, so I guess everybody will say the same thing, those that have been in the same space. So we kind of learned it the hard way.
Right. When you mean manpower, you mean shortage of manpower or getting the right people?
Both.
Right. But there's 270 million people in Indonesia.
So you kind of have to get the quality people there.
Right.
Not to mention, the aspects of, how people cheat, for example. I'm not going to get deeper into that specific, but that's part of the challenge that we'll encounter. So we kind of have to create a system, tweak it as we go. That's part of the journey, I suppose.
Right. Yeah, that's a good experience as well.
Right.
That's a very low-tech world.
Yeah.
Right. And how many stores did you have at the end of your business?
At our peak, we had about 9 stores.
9 stores.
In Jakarta and Greater Jakarta area.
Yeah. Would you do that in Singapore?
No. Well, this whole food time started in Singapore. So I realized that, hey, I probably have better chance in Indonesia where nobody's there.
Right. So you were taking a model that worked in a different market into a newer market.
Right.
And exporting it there.
Right.
All right. So let's fast forward to today.
Right.
Talk about Reidao.
Right.
So let's maybe talk about the name first. So it's spelled Reidao. I'm just going to pop up your pitch deck now so people can actually see that.
Sure.
Or it's more of a brochure actually that you have. But this is CrowdVilla that you talk about. But the company, if you can see the logo at the bottom, if you're listening to this on the podcast, I'll just spell it out Reidao. And that's 2 parts, isn't it? REI. So if you're from the real estate world, you may be familiar with that. And Dowell, DAO, from the blockchain world. Talk about each component.
Right. So, of course, when we first started, the ideal that we want to achieve with Reidao is to create a product where the community, the blockchain community, which is a DAO, can participate in a scheme where the organization invests in a property. So we borrow the terms that we know today, which is REIT, right? REIT, Real Estate Investment Trust. So we kind of changed the T, the trust, to a DAO because the property is now not under the trust anymore. Our vision is the properties should be under the DAO. Hence the name.
What does explain to me DAO?
Well, it's a DAO is decentralized autonomous organizations.
Mm-hmm.
In essence, we're trying to say that this organization is not located in any particular place because it's decentralized. All over the world, people can participate in this community by way of votings through our digital assets, for example. So that's form the basis of a DAO.
Yeah. So if we were to look, for example, at what has existed in the real estate market until now, REITs, for example, real estate investment trusts, quite a new development, especially in the terms of like the consumer side, where you've got like the Fund My Street style model, where you can have a group of unrelated amateur investors in many cases, and some professionals will get together and they will invest in properties, and they won't be involved in the fundraising themselves. They won't be involved in the acquisition, but in a very sort of Kickstarter style model. Right. There are many of those kind of like models out there, and to a varying degree of success that they've had. Obviously, the issue is that you're attracting people who maybe are amateur investors and don't understand the risks involved. But that's not specific to real estate generally. That's specific to the model, as it would be in any kind of equity crowdfunding, for example. Why do we need to then take that from the Fund My Street model to, for example, the Dowell model?
Right. I guess the biggest concern that people have with the current setups in the space, not just particularly this real estate model, I guess in most company models, is the centralizations that happen, right? If you mentioned earlier about how these people invest together, you still have that single point of value, which is your manager of that particular fund. So this is something that we thought we want to alleviate with setting it up as a DAO, right? So trying it out and having been successful in it, it's actually 2 different things. But I can share with you the ideals, and that's what we had before, to create a system where nobody has any control, centralized control over the fund. So, practically all the token holders, the participants, they have equal say, equal votes to what happens to the structures.
Right. So there's no fund manager per se.
Technically, exactly.
Or no trust manager.
Exactly. That's the ideals.
Right. Why is that ideal? Because somebody may argue that you need a professional in there who knows what they're doing.
Right. But then these crowds, well, there's this wisdom of the crowds. So it is also been argued that as a crowd, we perform better compared to one single expert. So of course there's that argument.
Right.
We don't know, right? I mean, I've been telling people that this is a experiment. We don't know whether it will work.
Right.
What we can do is really just try it out and see how it goes.
Okay. So the ideal being that a crowd can make a better decision than a professional. And this is being tested in many cases. And they're very interesting examples, isn't it? You mentioned Wisdom of the Crowds, going back to the book by James Surowiecki.
Right.
So the point is, for those that don't understand, and we'll dive deeper into your business model in a minute, the idea is, and I think it was put to test originally in counting jelly beans, wasn't it? And at a country fair. So they would put jelly beans in a jar and they would ask people to guess how many jelly beans there were. There's no way you could know how many jelly beans there were in that jar.
Right.
Unless you took them all out and counted each one individually, but they couldn't do that. And what they found was very interesting. There was a couple of things. Firstly, a larger group of people had more chance than an individual of guessing it right, statistically.
Right.
And the more diverse the group was, the better they were at guessing.
Right.
So, for example, if you just had a group of guys, they were less effective than a group who are mixed, as an example, and different backgrounds and so on. So that's the idea of wisdom of the crowds. And you say that in the real estate space, that could be something that's going to come up with a better decision on investments than, say, a professional fund manager?
Probably.
We
never know. We don't know yet. That's for certain. But probably, it's a good thing that if we can just try it out first. Of course, in a smaller kind of way. And that's the plan that we had before.
Okay. Good.
But of course, regulation-wise, then we're faced with different challenges. And this is why we're actually moving to, if you see the white paper earlier, it's about CrowdVilla.
Right. So let's talk about that. Let's talk about CrowdVilla. If we can get that up on the pitch deck, on the white paper. So CrowdVilla, Reidao, what's the relationship, just so we understand?
So Reidao is a tech company that we established to build this technology. But when we were trying to set up the structures, the legal structures to deliver Reidao, of course, we're faced with all, kind of regulations. Of course, recently, one of the most prominent one is whether a certain thing is considered securities, right? So of course, the model that I have been sharing with you, Reidao, will be seen as securities. So we need all the kind of licensing regime in all kind of jurisdictions that we want to enter. And we're not well capitalized for that. So we kind of need to keep working on the idea, but then we change the structures in a way that it's not about investment anymore. And that is why we come up with CrowdVilla.
Right.
So the idea is with CrowdVilla, people contribute to this effort of building portfolio, not for investment gain, but rather for utilization gain. So when we change that, immediately we fall under the regulations regime right now, and we're okay.
Right. So let me understand. If you were seen as a security, you need to be regulated like by the MAS or whatever jurisdiction you're in, right?
Right.
However, the alternative, as you're proposing, is, let me understand that a bit better. So what is that? That we're contributing to a...
Right.
What?
So CrowdVilla, it's a different entity.
Yeah.
And it is actually being set up as a non-profit entity based in Singapore. So by definition, because it's a non-profit, there's no shareholders. So whatever assets or crowdfunding that we do that will be contributed to this entity, there is no way these funds will flow out or benefits a particular group of people. So the idea is that we're telling people, if you are contributing to this CrowdVilla entity, we're going to use the fund to acquire assets so that we can make it available for all of you that contributed. So when people contributed to this entity, they know that there's no way it is going to be treated as an investment, because there is no way this fund will flow out to them. But we can, in return, give them utilization rights on the assets that we acquire.
Right.
So another way to look at it is actually a community-based asset ownerships. Right. So we as a community, for example, can acquire a hotel building, and because this building is owned by us as a community, we can actually make its utilization costs lower. Comparing with the competitors, probably the hotel next door.
Right. So let me understand that the trust, so to speak, the group, the DAO, owns as a community the asset.
Yes.
But the individuals can somehow get usage rights or investment, not necessarily rights, but through the community itself. But how would that happen? How would I, as an individual, for example, if I was part of that DAO and we purchased a hotel, and I can't use that as an investment within that structure, within that body, how can I then, as an individual investor, benefit from that?
So, of course, it is part of the whole token economy that we're building. The idea is that if you contribute, let's say, Ether, to this structure, CrowdVilla, in return, we'll give you a certain number of digital assets that we have. We call it CrowdVilla tokens. Now, these CrowdVilla tokens then represent your access rights to the properties. Like, for example, in the future, we can say that to stay in this particular properties, you need a certain number of tokens. So if you have that tokens, you can actually use it to stay property.
Like timeshare?
Like a timeshare, exactly. So I'm glad to mention that because legally, on paper, we're a timeshare company. And because of that, we're not securities.
Right, so a timeshare doesn't count as security or an investment. So you can buy time and all part own a holiday home, for example, and have usage rights to that. And you're legally allowed to resell those rights, or you're legally allowed to lease them to somebody else? How does that work?
Yeah, so as with the current regulations on timeshare, at least in Singapore, many parts of the world, timeshare is not securities. Only 2 jurisdictions that we know of consider timeshare as securities, and those are Malaysia and Australia. So when we do our token sale, we are excluding them out. So we cannot sell them. But as again, with all these regulations on timeshare, you are legally allowed to transfer your timeshare contract. So we are just mimicking the model. And immediately we're under all this regulation regime right now.
Very interesting. I got it. Maybe we can just have a look back at your white paper here. And we'll flick down to, I know there's a lot of data in here, so those who actually want to go and delve deeper, there's a lot of research that's gone into it. I'm going to have a look. I want to focus on the visual element here, like the holiday homes. Just as an example here. So this looks to me like it would in the 80s or 90s, a timeshare brochure, for example, in the similar kind of feel to it. So there's nothing new there in that sense. But let's say, this property here looks like it could be somewhere in Bali or Indonesia.
It is in Bali.
Oh, okay, right. Just by the design and the structure, you can kind of get that feel, can't you? So there are some amazing properties there, right? And there's a very well-established property market. So is this a real example, or even if it's not, can you talk us through how this would work from the moment where you would have the DAO go and acquire this asset and fundraise for that process?
It's actually a pretty straightforward process. When we do our token sale, we're essentially trying to build a portfolio of assets. So we will legally, the nonprofit organizations, will legally try and acquire all these assets. When we do, we'll open it up for the community to book. Now, from the user point of view, it's like they're booking hotel rooms from a booking platform. Of course, our main offering here is that as a community member, you'll be able to utilize these assets at a lower price point. Again, because as a nonprofit, there is no yield or premium that needs to be attached to the utilization rights. And if we do this well, we're basically changing how society works. Because as a community now, we can come together and acquire particular assets that all of us will use and basically pay base costs on that unit. One example, these kind of villa in Bali. If we look at the market right now, say 4 bedrooms, beachfront villa, it will probably run you about, depending on the seasons, $500 a night to $1,000 a night. But if you look at what constitutes that price, it's actually your real operational costs, electricity, salaries, and all that. Plus, there's a big part of it is actually a premium that is supposed to be paid to the landlord, the owner. So if we change this model, if we already acquire this property and we run this unit as a nonprofit entity, and just to make it available to our community, immediately this price point will be lower. That's the angle that we want to test.
Right. Okay. The part about acquiring assets generally in society, I'm fascinated about that and happy to talk about that, and we'll dive into that in a minute as well. Going back to buying the villa, for example, you talk about the premium. I imagine that a big part of that premium is the fact that redundancy or void periods for any, seasonal property owner is going to be a massive issue is the fact that, okay, they can charge 500 to 1,000 a night, but they may only be booking 7 or 8 nights in a month, right? So that's why they have to charge, is because unlike the residential let, which maybe be charging at 100 to 200 a night, you know, they're only covering 8 or 9 nights. But if you were to then tokenize that somehow and offer it to a wider group of people, that could help address that issue of the fact that the biggest challenge facing any landlord is void. It's not necessarily the cost, the margins are there easily, but it's the fact that maybe you're addressing that. Do you find, have you any thoughts on how that could have addressed void periods for landlords?
Right. So the way I look at it, even for the current landlords, that void periods, even after the premium that they put in that 8 to 10 days probably in a month that is being rented out, it still constitutes a certain number of yields that is expected of the properties of them. And this can run, at least in Bali, probably about 3%, 5%, 6%. So at least we take that out, that 3 to 6% probably. But of course, when we do this as a community, that void period challenge, we hope can be alleviated further, because it's a loyalty play now. All these are stakeholders now. All of us are stakeholders. If we have a choice to actually go to Bali, probably all of us will want to stay in our own property. So that's an angle that also we're testing out.
Right. And what you're mentioning as well, we'll talk about this on the wider context of asset acquisition or ownership, use of assets in society in general, and what you think that could apply to. If we look at a lot of the successful models of recent years, Airbnb, Grab, Uber, etc., really they're not bringing in any new assets. They're just unlocking redundant assets. I mean, Airbnb is a classic example, isn't it? Is that, you know, a lot of people have a spare room and they can make money out of that. They're not people who are actually building rooms for Airbnb. I mean, that's a different sector now entirely. But like what you're saying is that the challenge is that there are assets out there, but the manner of acquiring them is difficult for the people who want to use them, right? I want to use a room. I want to stay for one night. I don't want to buy a house to do that, right? But this guy has a house and a spare room. I could use it. The same with a taxi. You know, the reason why Uber or Grab can charge less is because they don't have more drivers. They simply have drivers doing more trips, right? And the driver is getting paid more because he's busier. So where do you think this, taking that Dowell model, could apply in a wider community in terms of, you talk about assets and changing society?
Right. I think that's very interesting that you mention all these businesses, right? Because that's the ideals that everybody started with. But if we looked at all these businesses, the one that you mentioned, it's really not about sharing economy anymore, at least in my opinion, right? It's really about micro-rental economy now. Like you mentioned about someone having a spare room and renting this room out. But if you look at the statistics of the type of properties that is listed on Airbnb, for example, chances are right now it's a whole unit rental. So people are starting to use this platform as a way to gain more rental yield out of their properties rather than sharing their extra room out. Likewise with Uber or Grab, it's probably more people now, you know, effectively trying to get more return out of their, you know, rental fees of the properties. In fact, probably there's a specific business model based on that. So it's not about sharing economy anymore. I guess that's a problem that we want to address, right? We're trying to say that, hey, micro rental economy, in the end, you still pay the premium because all these backers, they have, you know, capitals behind them that is actually expecting a kind of returns.
Right. And they're middlemen, effectively.
Middlemen, and of course, the shareholders, for example, right? Of course, it's a fair model. It's in this whole capitalistic model, it's fine, right? Nothing's wrong with that. But what if we as a community now, instead of having someone, you know, trying to do a micro rental on us, we come together and we actually operate this as a true sharing model. So this is the terms that we use, true sharing economy, because this is essentially what we're trying to have. Now, as an example, like the two of us, let's say you and I, we're good friends today. And then let's suppose we travel to Bali often. And we agree that, hey, let's pool funds. We buy this villa. I get to use it for 6 months. You get to use it for 6 months in a year. Now, the economic model changes. If we travel there and use our own allocations, we don't pay any more rent. Technically, there is no premium to be paid anymore. We just pay that utilization cost, electricity bill, which is, have to be there. So the economic model changes when we change the structures. Now, with blockchain, with CrowdVilla, we're trying to scale this model up to thousands of people, thousands of properties. Because without this blockchain system, ecosystem, we can only do it between friends. Because I trust you, you trust me.
Right.
When I tell you that I use the property for 6 months, you know that I'm only using it for 6 months. I'm not going to run away with the TV, for example. But, it only works between friends today. So we want to scale it out and try it out, see what happens.
What can happen? You take in that model to real estate as an example, which is easily compartmentalized and quantified, and there are models there. Where else could it affect? You talk about this affecting society in general. Where do you see? I mean, be blue ocean on this one. So where can you see this impact society in 5 to 10 years?
So we started with CrowdVilla, which is focused on holiday homes, simply because everybody pretty much is familiar with holidays, right? They travel one way or another sometimes. But this model can be replicated to all kinds of assets out there. One of the verticals that we've been looking at, and recently is very, very popular about this sharing economy of spaces, which is
event spaces,
offices,
which
is very hot right now.
Yeah,
or co-working spaces. It's the same, logic behind it. When we look at co-working spaces today, it's not so much about sharing economy anymore, but it is really about micro-rental economy.
Right, exactly. And look at the people who are getting involved, like the WeWorks and the Regises. They're just big real estate players, commercial landlords.
Exactly. And at the end of the day, they still require that yield to be, given to their shareholder in the long run. And who is paying that premium? Us as users. Of course, by them lowering the price point down, it gives access to many of us now to be able to use the office space. But what if there's a different model? We change the structures now. What if we as a community, we can come together and actually own that office building, and all of us can use it together as a community at a lower price point, no premium to be paid. Again, that's an experiment that we probably will do.
Exactly. How could it work? For example, we have a studio here. This is possibly the only audiovisual studio in Singapore, because I've looked for them, and therefore I couldn't find one. So I had to go out and make and buy the asset myself and furnish it. But I know a lot of people want to use it. How can I apply that model to what you're saying? Is it possible now that the asset's already acquired, so to speak? Somebody doesn't have to come in and build their own studio now.
Right.
There is this here. How would I apply that model for something like this?
Well, it depends on your positions on it. Of course, the idea, the model can be replicable to be, for all this kind of utilization scenario. Like this studio, for example. If you want to exit your positions in this studio, the ownership, then you can then set up structures where a community, a group of people that wants to use the studio co-own this indirectly so that they can use it together without the premium part. Of course, the traditional model is that you as a landlord, you rent it out and you make profit out of it. But so it really depends on your positions. But if it were to be a new community, people that want to use this kind of studio together, then the same model can be applied.
So I could put the ownership into a structure.
A vehicle, yeah.
Yeah, like you suggested, a Dowell.
Right, something like that.
Okay, effectively, I would divest my asset and ownership of it, and then they would own it as a community,
right? And
they would get usage rights to it in the same way they would have on a timeshare.
Right.
Very interesting. Maybe we should talk about that. Now you've planted a seed in my head, an idea that's growing. All right, Darvin, just before you go, a couple of things I want to ask you. Obviously, very interesting model. The white paper's here. I'm interested in, where you go from here. You're currently raising at the moment?
Yeah, so we're doing the token sale right now for CrowdVilla. It's happening on this platform called GBX, Gibraltar Blockchain Exchange. It's going to be there until end of September.
Okay, so we'll put all the details in the show notes for people who want to find out more. And as a team, are you growing? Are you recruiting?
Well, yeah. I mean, this space, we are always recruiting. We have a shortage of talent, if that's not obvious yet.
Yeah.
Because all of this hype about token sale I see is blockchain. So yeah, I mean, we are trying to get in touch with people that are willing to learn. Myself and my co-founders, we didn't start it with the full knowledge of the blockchain. We self-learn ourselves. So we kind of are expecting the same attitude. Like we don't expect these people to already know what they're doing. At least they're willing to learn.
Passionate about learning.
Exactly.
Sponges.
Exactly. That's good enough for us.
Right. And so they understand what kind of culture as a company are you? How would you describe it?
Well, we're actually pretty, in a way, we have a high degree of flexibility.
Yeah. Decentralized?
In a way, yeah. So, like, for example, we know that commuting actually costs time. So we don't need to commute as much as possible. If we can hold the meetings somewhere else, we'll do that. And, that's just one real.
The reason I ask is, there may be people who say, look, I can't get to Singapore.
Yeah.
But I'm passionate about what you're doing.
Right.
Should we talk? So
definitely.
You'd be interested to hear from them.
Yeah, we've been doing that actually.
Okay, excellent. So what's the easiest way for people to get hold of you? What's the most effective communication channel?
Well, our email address are on our website. That's usually the first point of contact that we have. We also have communities being set up on, it's already there, by the way, a Telegram group.
Okay. Can we put all the details in the show notes?
Sure.
Okay, if people want to get in touch.
Sure.
Darvin, fantastic having you on the show. Thanks a lot for sharing your journey with us today. Wish you all the best. And I think you're in a space which will yield some interesting insights into, a wider application, like you talked about, the impact on society as well. You're a challenge. I know people talk about disrupting, but I think the word challenging the way people view those sort of ownership and usage of assets as well. And I think those people that have listened to the conversation will get where this is going, should be interested in what you're doing and pay close attention to your journey. So Darvin, thank you very much. That's Darvin Kurniawan, everybody, founder and CEO of Reidao. We'll put all the details in the show notes, show you how, if you want to reach out to Darvin. Thanks a lot for coming on the show today.
And thanks, Graham, for having me.
Excellent.